Today's we're gonna be covering the low volatility strategies. So let's go ahead and get our notes going here, and then you guys can just take a screenshot of this when it's all over, and just kind of have like a good, well, something to review. Low volatility strategies. And this should be a lot easier. Now keep in mind that these strategies are going to imply, or keep in mind these strategies will work best in a low vol environment, but when you expect increasing vol, right? So essentially, vol starts low, and we expect it to go higher. Now, if you're interested in strategies that'll work better in a low volatility environment, but are low volatility strategies, I would suggest checking out yesterday's session. Basically, the way that I'm doing it is yesterday was high volatility strategies, but all the strategies that we covered were reversion back to the mean type of strategies. And these strategies today will be low volatility strategies with ideas of expansion, right? So if you watched yesterday and then today, you'll have a good idea as to what to do depending on what you expect volatility to be doing. So let's go ahead and dive in. So first things first, let's get our bearings here. How do you know if you have high volatility or low volatility? One thing that I need to correct or add on to is IV rank. So yesterday we talked about implied volatility, and I showed you how to find the percentage of implied volatility. But here's the thing: not all implied volatility is created equal, right? So if you have for example, if you have a 65% implied volatility on the TLT, which is bonds, that's much higher than if you have 65% implied volatility on, say, something like Roku, right? We all know that Roku moves around a lot, and therefore its implied volatility range, if you will be significantly higher usually than something like TLT, which is bonds and moves a lot slower. So something that we need to cover is IV rank. What IV rank does is it essentially neutralizes that, and it tells you, based on this instrument's own movements, where is it in its own IV rank? So let's go ahead and start there. If the IV rank is, let's say, 0 to 25, right? So if you were here yesterday, this is the same thing. You want to be buying options, and this is kind of where we're going to be talking about today. If the IV rank is from, let's say, 25 to about 60, you can buy or sell options. Get a little bit of both. The IV rank is from 60 to 100. Typically want to sell options, right? Just rules of thumb. Don't get married to those ideas necessarily, but they're very good rules of thumb. So before we kick off in terms of the strategies and how to set up the trades and whatnot, let me show you this. And it is going to be the IV rank and how to find it. So if you're on TOS, you can find it in your trade tab. If you're on Tastyworks, it's a little bit easier. Well, a little bit less hidden, I suppose. But you see right here where it says the IV rank for the SPX is 63. So what do we want to be doing in that instance, right? We just talked about those IV ranks. Understanding that the SPX right now has an IV rank of 63, what do we want to do? Buy, sell, or kind of in the middle? All right, Noel Doug, yep, you got it. You want to be selling, right? Just based on our rules of thumb, if we just go right back to our notes, literally right here it says if the IV is between 60 to 100, you typically want to sell options. So this is not a low volatility environment, right? Clearly. If the volatility was down here at 25, then we would want to be buying options. But we're just going to work with a hypothetical market for now, because we have a high volatility market and we're talking about low volatility strategies. But if you're ever curious as to how to apply the rule of thumb, just look up here. It's called the IV rank. And you can find this on TOS. If you go to your trade tab, it'll be under well, I could just show you actually. Give me just 1 second. So everybody's okay with where IV rank is on Tasty, right? We're all good on that. Now your IV percentage is going to be over here, right? Now in terms of the rule of thumb, pay attention to this number, right? Because you see how this number is pretty wonky over here. This is still important, but in terms of your rule of thumb, in terms of is the IV high or low, what should I be doing? Pay attention to the IV rank first, and that'll give you your initial first step on whether you should be buying, selling, or you know, kind of in the middle. On toss or on toss, let me pull up toss here, have it up in another window, and I'll show you how to find it there. Okay, so here comes toss. And I'm just going to use the Qs here as an example. So to find the IV rank, go to your trade tab, click on today's options and statistics. And of course, we have flags for this stuff as well, right? So if you guys want the trade flag that you can put right on your chart so you don't actually have to go through this process, we have that available. I think it's a free indicator, so just ask Eric or Duncan or any of the tech guys and they can help you install it. I don't have it on my charts. It would be helpful, but it's going to take up real estate, so I just use it this way, right? So you go to your trade tab, you go to options statistics, and you're going to see it right there. So your IV rank is current IV percentile. There you go. So a little bit of a different name for it, but same thing. So you see how it's 66% there? So same thing, you know, we saw it on SPY or SPX, it was 63. On the Qs, it's a little bit higher, but right in that ballpark. So that's how you find it on both. So you always want to understand what that number is because it will dictate your strategy. If it's a very low number, you typically don't want to be selling options. And if it's a very high number, you typically don't want to be buying options. So we're all good there. Let's go ahead and start talking about some strategies here. So keep in mind that when IV rank is low, that decreases the value of all options, even calls or puts, or, you know, even if it's going counter trend, it would still decrease the value of all options. As such, we typically want to be buyers. And why is that? Well, hopefully it makes sense because the prices are low, right? The premiums are low is what I should say, right? The premiums are lower and therefore can favor the buyers. All right, so what is the simplest strategy we can use for this environment? If we know that we want to be option buyers, and keeping in mind, not in this market, right? It's a hypothetical market where the IV rank is between 0 to 25, 0 to 30, right in that range. That would be considered low. So what's the simplest strategy that you can think of that involves buying or buying an option? Well, the simplest strategy is to buy the option. So strategy number one, buy the option. Call or put. Right? Pretty straight up. And again, the reason we want to do that is because premiums are low in a low IV rank environment. Right? So we're all good with that, right? We all understand just buy call, buy put, right? That's kind of day one kind of stuff. So I'm not going to show it on the charts because it's just really that straight up. So let's actually just talk about the advantages, right? What are some of the advantages of just buying a straight up call or put? Well, number one, I probably don't need to write well. Number one, you maximize your directional movement. Right, there's really no better way to capitalize on a directional move other than a call or a put. Right, so that is an advantage. Another advantage, given this scenario, is the premiums are low. And kind of that's what we keep coming back to. The premiums are low. Therefore, we're not paying as much for extrinsic. Everybody knows what extrinsic is, right? Extrinsic value. And that's pretty much the two advantages. Now let's talk about some disadvantages, because everything, just like in life, everything has an advantage and a corresponding disadvantage. So what are the disadvantages of buying calls or puts? Well, theta, number one, right? So time decay. If you just buy a call or a put, you will face time decay. It doesn't matter whether you buy a call or a put. All options are essentially bananas on a grocery store shelf, right? They have a shelf life. Every day that passes, that banana gets a little bit closer to being a little bit past its edible date. So time decay is a big one. The other disadvantage, well, that's pretty much the one major one in terms of this particular strategy is going to be theta. In this environment, the disadvantages would be theta, your vega is fine, your gamma is fine, your deltas are fine. Yeah, so time decay. So let's talk a little bit about time decay. So with time decay, your underlying, right, your stock has to move faster, and this is just kind of a little bit of a note, has to move faster in terms of price than the theta or time decay. And so essentially you have a foot race between, is your stock, let's say you buy a call, is your stock going up faster than the time decay that's coming off of it? If it is, you're going to have a good time. If it's not, and it's going up but very, very, very slowly, and time is actually eating away at it, not a good thing for that particular strategy. So let me see if I can make this bold here. And I cannot. All right, let's keep going. So strategy number two, and this is the one that we'll actually take a look at on the options chain because it has multiple legs to it, is to buy debit spreads. And this is what you'll see us doing most often, right? So most of the time in this room, and in general, really, but in a lot of the times in this room, you're going to be buying a debit spread or selling a credit spread, right? It just depends on what side you want to be on. Do you want to be on the buy side of the spread or the sell side? Now, since we have a lot of new members, it's definitely worth talking about. If IV rank is low, and that's the first thing you need to check out, right? Once you have a stock that you want to trade, next thing you do is go check the IV rank. That tells you exactly where you should be positioning on the buy side or the sell side of options. Keep in mind, buy side or sell side, you can stay bullish and be selling options, and you can stay bearish and be buying or selling options, right? So the strategy number two would be buy a debit spread. So let's take a quick look at what something like that would look like. Let's do it here. Let's do it for Friday. And let's do just a long call vertical. We'll do it at the money. And we'll do it, let's just do it 25 wide. All right. So hopefully everybody can see these numbers. I'm on a PC and it doesn't scale great, but this is what this would look like, right? Essentially, you buy one option, you sell another one against it. When you're doing it in a bullish way, the one that you buy is going to have a higher delta, right? So notice the delta here is 55. The one that we're selling is 49, leaving us with a net positive or bullish delta of 6. So this would be one example. The idea behind it is essentially you cover some of the cost. Really, you're buying this call, right? And it doesn't matter which one it is. This is just an example, but you're buying that call and you're selling something against it to finance the call and to reduce some of the nasty effects of time, right? Notice that by selling a call, you reduce time as well. So there's a little bit of an advantage there. You can see here that your profit potential, if you set it up right, can be 1-to-1. This one's a little bit off, but it can be 1-to-1. And essentially what you end up with this particular example on the bullish side is a positive delta trade. So let's go through our Greeks here. What is your delta? It's going to be positive. What is your theta? What's the symbol for theta? Kind of looks like a infinity sign, doesn't it? I'm just going to put a T. Theta can be positive or negative. It's better if it's positive for your debit spreads. And then your vega, which is the conversation that we're having, is going to be positive, right? Why does that matter? Well, because with a vega that's positive, right? These are the three main Greeks. This is delta, theta, and vega. With vega being positive, you're taking advantage of potentially volatility starting to expand, right? And if volatility starts to expand and you have a positive vega, that will help your position, right? So let's go back to the notes here. So buy debit spreads. Let's give ourselves the reason. The reason we want to buy debit spreads is because the premiums are low. So the same kind of idea applies. Oops, premiums are low. But we don't want as much directional exposure. So really the only difference between one or the other is you won't have as much directional exposure. So let's talk about some of the advantages. Advantages, well, you're on the right side of, how do I say this? You keep directional movement, right? So you can keep the directional movement idea or strategy. You reduce your time decay because you sold something against it. So the one that you're selling is also decaying, and that is helping you keep some value in the spread. You keep a positive vega, which is volatility or implied vol. And those are the advantages. What are some of the disadvantages? Well, the disadvantage of the debit spread is it caps your movement. You know, the idea with a spread here is there is a max profit available in the spread, usually the width of the spread. Although rule of thumb is that the profit target is let's call it 50 to 75% of the width of the spread. Everybody good with that? So what does that mean? Well, let's say, for example, you have a okay, so you have there's just this example here. You have you buy the $100 call, you sell the 110 against it. How wide are you? Well, you're going to be 10 wide, right? So you've just created a call debit spread because you bought the more expensive call, you sold typically an out of the money, less expensive call against it. You've created a call debit vertical, and your max profit is $10. Now that doesn't happen often, right? That's not going to be too realistic. But in reality, what you can do is take 50 to 75% of that, and realistic profit is $5 to $7.50. It's in that ballpark. All right. So, any questions so far? Any questions so far? So these might be just the two strategies that we cover, guys. Yesterday we covered some strategies that revert back to the mean in terms of high volatility. So if you're in a low volatility environment, and you think that the volatility will continue to go lower, then you typically don't want to do these strategies. These strategies are perfect strategies, and I'll just go ahead and put a note here because I think it's worth it. These strategies are ideal for a low volatility environment where we expect vol to increase. If you are in a low vol environment and you expect volatility, I'll say IV, to continue to decline, you typically want to do the strategies that we covered yesterday. All right. Now, there's a couple of additional strategies that we're not going to cover today. You know, there's diagonals and calendars and whatnot. But at least for today, combining the 3 or 4 strategies that we covered yesterday, and if you combine these 2 strategies from today, primarily understanding and having a deep understanding as to when you should be doing debit spreads, when you should be doing put credit or credit spreads, that's going to help you guys a lot. The primary strategies that we use here are going to be buying calls and puts, obviously, buying debit verticals, credit verticals, butterflies, iron condors, and, well, that's most of them. That's most of them. So that's what I got for you guys. So let me know if you have any questions. I think this particular topic's pretty easy because this is a lot more of what everybody's more familiar with. You know, everybody's a little bit more familiar with being on the buy side of options. And so low volatility environments where you expect volatility to increase is a little bit easier to talk about than it is than selling premium, which is what we covered yesterday. But I think if you combine what we talked about today and what we covered yesterday, it'll give you a pretty good toolbox in terms of 1, understanding IV rank and what you should be doing, and then 2, taking those strategies and applying it to the whenever you're trading. So where do you get IV on toss? Well, we covered that one, Ike, but I can show you again. So it's right here. So you go to the trade tab, you click on option statistics, and you can look at the IV percentile. And then depending on whatever that number is, you can then use your rule of thumb here. We put up here, and if your IV rank is in that ballpark, that's typically the strategy you want to be following. Why is IV 63 on Tasty but 67 on Toss? Bob, if on what product exactly? Because we're looking at 2 different products here. Yeah, we're looking at 2 different products. This is the QQQ, and actually, let me just look and see. So right now, the QQQ has an IV rank of 67. Let's check it out over here on Tasty. Interesting, 63. Let me look into that, Bob. I'm not entirely sure. Let me run that one by Bruce. He's our local expert on the Greeks, and maybe he can tell me. The discrepancy is not huge, and at the end of the day, it doesn't change your strategy, right? It's over 60, so whether it's 63.5 or 67, your strategy remains the same. But there is a little bit of a discrepancy here. That's not that uncommon to see a discrepancy, and it's not a major one. But let me run this one by Bruce, and if you happen to be in here, either in my sessions or I might have an answer for you by the close. So I'll be doing the close in the gold room. If you want to pop in there, I can run it by Bruce and see what he thinks. I'm not entirely sure. It's not a huge discrepancy though, and it doesn't change the overall strategy. You'd still be on the sell side. How do you scan for these trades? Well, you typically won't, Ike. You typically won't be scanning for them. So for example, you would trade this just like anything else. So for example, let me use IWM, right? Now you can actually let me pump the brakes there. You can actually scan for high IV rank or low IV rank, right? That is a scan that you can do, and you can just scan for things that have a 90% IV rank or 100% IV rank, or 10, 15, 20% IV rank for given the particular topic of today. So that you can be buying options in low IV rank names. You definitely can scan for that. However, I don't I'm not one to scan strictly for IV rank, right? Typically, what I recommend that you do is still follow your normal scans, follow your normal charting, and then once you have a chart that you want to either buy or sell, then apply the strategies that we just talked about. So in terms of scanning for individual names, I still would go through your normal process and trade it that way, and then just adjust your execution based on the IV rank and whether you want to be on the buy side of premium or on the sell side of premium. So I can give you an example right here. So IWM, right? IWM, and I don't have a trade here, but I use this as a way of talking about the trade of the week that Danielle did. So IWM, in my opinion, has a buyable setup here. It's a difficult setup because it's counter trend, right? It's very counter trend, but the setup is buyable. So I'll just cover it really briefly. So why do I think it's buyable? Well, because you've put in a double bottom here at a key extension that was a massive weekly extension right around 96. So I have a visible floor there, and I have the right momentum structure. You see how the momentum is rounding back out to neutral? Not only that, but then I also have the right type of momentum here. You see how the red line is coming off of 0. I talked to you guys about that a lot. Also, this indicator is coming off of 0, etc. Right? So let's say that I've done my normal chart work. I want to buy IWM. What's the next step? Well, you have to do your normal work. So then we go to Toss or Tasty or wherever you trade. Go to IWM. And you should already be able to tell me what the IV rank is going to be, but let's look at it. So, all right. So we want to buy IWM. We know that. We want to, well, at least for the example, we want to buy IWM. In reality, I wouldn't buy it. I would probably buy the Qs. But for the example, we want to buy IWM. We then pull up the chain and we see what the IV percentile is. You see how it's 74? That shouldn't be a surprise because the other indices were in the 60s. So with an IV rank of 74 and the idea that we want to buy IWM, what do we want to be doing here? I am going to wait for somebody to give me an answer. So we want to buy IWM. The IV rank is 74. What do we want to do? There you go. You guys got it. Exactly. So yeah, I know it's kind of counter to what we talked about today because we're talking about low volatility, but in reality, that's the right strategy, right? So just putting it in context here, we want to buy this chart. We check the IV percentile. We realize that it's above 60, which means that the premiums are high. When the premiums are high, we typically don't want to be on the buy side of premium, but we can still sell premium. So just like Noel Doug specifically said, or Lelit and Gerald, put spreads, right? Put credit spreads would work in this environment. So in this environment, we would sell something like just to give you an example, we'd sell the 110 put, we'd buy the 105 put as protection. The idea is that because the premiums are high, by selling this put that has more value, you are on the right side of premium, and then if it moves in your favor and it actually goes higher, not only have you put yourself on the right side of premium, but then you have put yourself on the right side of the market, delta, and with a put credit spread, it will usually be time positive as well. So that will be good for you too. So if you think about your main Greeks, your deltas are positive, which is what you wanted. The vega is negative, which is what you wanted because you want to be selling premium with an IV rank above 60. And your theta for the put credit spread would be positive. So you're on the right side of delta, theta, and vega in that situation. That hopefully that helps. So in terms of scanning, I still suggest scanning exactly as you would normally. Just factoring in the IV rank and understanding what to do once you've arrived at a chart that you either want to buy or sell. The alternative, if you're less of a technician, and if you're less of a technician, then you're more of a Bruce person. But the alternative to that strategy, which is my preference and what I do, is to scan specifically for high IV rank stocks and then work backwards to figure out what you want to do in terms of the chart. But I typically will recommend to you to start with the chart, understand what you want to do with the chart, up or down or sideways, and then use the IV rank to create the structure for your trade. All right, guys, last call for questions. Any questions? Go ahead and put this back up here. If anyone who wants to take a screenshot of that before it's gone forever. See if I can get it all on one list here. Yeah, there you go. So sorry I don't have it. Well, maybe you can take a screenshot of that and that'll work. And if you just watched today's but you didn't watch yesterday's, yesterday's should be posted. Just go check it out. Basically, my goal with this was just to show you 5 different strategies that you can use and basically when to use it, right? Because it's not so much, especially with options, guys, it's so much, execution is so important. You can get the direction totally right. You can have everything totally right, but if you execute it the wrong way, it won't go as well as it could have. So execution in options is very, very important. And we've talked about 5 strategies over the past 2 days. And I think if you start with a chart, work backwards from there, I think this will put you in a good place in terms of executing your trades as you intend.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me over.